Welcome to our comprehensive analysis of the crypto market. In this video, we'll explore the latest trends, key drivers, and important insights shaping the world of digital currencies in 2024. Whether you're a seasoned investor or just curious about cryptocurrencies, this journey will help you understand the forces at play in this dynamic market. We'll start by setting the stage with a brief overview of what the crypto market is, its significance in the global financial landscape, and why it continues to attract attention from individuals and institutions alike. Let's dive in and uncover what's happening in the world of crypto. Cryptocurrency is a form of digital or virtual currency that uses cryptography for security. Unlike traditional currencies issued by governments, cryptocurrencies operate on decentralized networks based on blockchain technology. This means transactions are transparent, secure, and not controlled by any central authority. Bitcoin, the first and most well-known cryptocurrency, paved the way for thousands of others, each with unique features and purposes. Understanding the basics of cryptocurrency is essential before diving deeper into market analysis, as it sets the foundation for how these assets are valued and traded. Crypto market has experienced significant growth in 2024, with total market capitalization reaching new highs. This surge is driven by increased adoption, institutional investments, and the development of new blockchain applications. More people are using cryptocurrencies for payments, remittances, and even as a hedge against inflation. The entry of large financial institutions has added credibility and liquidity to the market, making it more attractive to a broader audience. Let's look at the numbers and see how the market has expanded over the past year. Several factors are driving the crypto market in 2024. Technological advancements, regulatory clarity, and growing public awareness are among the most influential. Innovations like decentralized finance, DeFi, and non-fungible tokens (NFTs) have opened new possibilities, attracting both investors and developers. Meanwhile, governments and regulators are providing clearer guidelines, reducing uncertainty and encouraging participation. Public interest continues to rise as more people learn about the benefits and risks of digital assets. These drivers collectively shape the market's direction. Bitcoin remains the dominant force in the crypto market, often setting the tone for other digital assets. Its market capitalization, trading volume, and widespread recognition make it a benchmark for the industry. In 2024, Bitcoin continues to attract institutional investors and retail traders alike. Its role as a store of value and a potential hedge against inflation has solidified its position. However, competition from other cryptocurrencies is growing, leading to a more diverse and competitive landscape. Ethereum is the second largest cryptocurrency by market capitalization and is known for its smart contract functionality. Smart contracts are self-executing agreements with the terms directly written into code. This innovation has enabled the rise of decentralized applications, DApps, and DeFi platforms. In 2024, Ethereum's network upgrades and scalability improvements are attracting more developers and users, further strengthening its position in the market. The ecosystem around Ethereum continues to expand rapidly. Beyond Bitcoin and Ethereum, thousands of alternative cryptocurrencies or altcoins are making waves in the market. These coins often focus on specific use cases such as privacy, scalability, or interoperability. In 2024, several altcoins have gained significant traction, offering innovative solutions and attracting dedicated communities. The diversity of altcoins provides investors with more options and opportunities, but also introduces additional risks and volatility. Staying informed about the latest developments is crucial for navigating this evolving landscape. Centralized finance, or DeFi, refers to financial services built on blockchain technology that operate without traditional intermediaries. DeFi platforms offer lending, borrowing, trading, and yield farming, all managed by smart contracts. In 2024, DeFi continues to grow, attracting billions in total value locked and enabling new financial products. The transparency and accessibility of DeFi are appealing to users worldwide, but the sector also faces challenges such as security risks and regulatory scrutiny. Non-fungible tokens, or NFTs, have revolutionized the way we think about digital ownership. NFTs represent unique digital assets such as art, music, or collectibles and are bought and sold on blockchain platforms. In 2024, the NFT market remains vibrant, with artists, creators, and brands leveraging this technology to reach new audiences. While the hype has cooled compared to previous years, NFTs continue to drive innovation in digital content and asset management. Regulation plays a critical role in shaping the crypto market. In 2024, many countries have introduced clearer guidelines for digital assets, providing a more stable environment for investors and businesses. Regulatory clarity helps reduce uncertainty and encourages responsible innovation. However, the global regulatory landscape remains fragmented, with different approaches and priorities across regions. Staying updated on regulatory developments is essential for anyone involved in the crypto space. Institutional investors, such as hedge funds, asset managers, and corporations, are playing an increasingly important role in the crypto market. Their participation brings greater liquidity, stability, and credibility to digital assets. In 2024, more institutions are launching crypto-related products, such as exchange-traded funds, ETFs, and custody solutions. This trend is helping to bridge the gap between traditional finance and the emerging world of cryptocurrencies. Retail investors continue to be a driving force in the crypto market. With the rise of user-friendly trading platforms and educational resources, more individuals are participating in digital asset trading than ever before. Social media and online communities play a significant role in shaping market sentiment and trends. In 2024, retail investors are not only trading but also engaging in staking, yield farming, and governance activities, contributing to the market's vibrancy and diversity. Volatility is a defining characteristic of the crypto market. Prices can swing dramatically in short periods, influenced by news, regulatory changes, and market sentiment. While volatility presents opportunities for traders, it also introduces risks for investors. In 2024, the market remains highly reactive, with both positive and negative catalysts driving price movement. Understanding the factors behind volatility is crucial for making informed investment decisions. Security is a top concern in the crypto market. Hacks, scams, and vulnerabilities can lead to significant losses for investors and platforms. In 2024, the industry is investing heavily in improving security measures, such as multi-factor authentication, cold storage, and smart contract audits. However, risks remain and users must stay vigilant. Understanding common threats and best practices is essential for protecting digital assets in this rapidly evolving environment. The heart of the crypto market is blockchain technology. A blockchain is a distributed ledger that records transactions in a secure, transparent, and immutable way. This technology underpins not only cryptocurrencies but also a wide range of applications, from supply chain management to digital identity. In 2024, ongoing advancements in blockchain are enabling faster, more scalable, and energy-efficient networks, paving the way for broader adoption. Cryptocurrency adoption is growing worldwide, with different regions embracing digital assets at varying rates. In 2024, countries in Asia, Africa, and Latin America are leading the way in terms of user growth and innovation. Factors such as economic instability, remittance needs, and mobile technology are driving adoption in these regions. Meanwhile, developed markets are focusing on regulatory frameworks and institutional integration. The global nature of crypto is one of its most powerful features. Stablecoins are a type of cryptocurrency designed to maintain a stable value, usually pegged to a fiat currency like the US dollar. They provide a bridge between traditional finance and the crypto world, offering stability and ease of use. In 2024, stablecoins are widely used for trading, remittances, and as a safe haven during market volatility. Their growing role in the ecosystem highlights the demand for reliable digital assets. Central bank digital currencies, CBDCs, are digital versions of national currencies issued by central banks. Unlike cryptocurrencies, CBDCs are centralized and regulated by governments. In 2024, several countries are piloting or launching CBDCs to enhance payment systems and financial inclusion. The development of CBDCs is influencing the broader crypto market, as governments explore the benefits and challenges of digital money. Crypto exchanges are platforms where users can buy, sell, and trade digital assets. In 2024, exchanges are becoming more sophisticated, offering advanced trading tools, security features, and a wide range of assets. The competition among exchanges is driving innovation and improving user experiences. However, users should carefully evaluate exchanges based on factors like security, fees, and regulatory compliance before choosing where to trade. Storing cryptocurrencies securely is essential for protecting your assets. Crypto wallets come in various forms, including hardware, software, and paper wallets. In 2024, advancements in wallet technology are making it easier and safer to manage digital assets. Features like multi-signature authentication and biometric security are becoming standard. Understanding the different types of wallets and their pros and cons is key to safeguarding your investment. Mining and staking are two primary methods for securing blockchain networks and earning rewards. Mining involves solving complex mathematical problems to validate transactions, while staking requires holding and locking up coins to support network operations. In 2024, the shift towards energy-efficient consensus mechanisms, such as proof of stake, is gaining momentum. Both mining and staking play vital roles in maintaining network security and decentralization. Energy consumption and environmental impact are important considerations in the crypto market. In 2024, there's a growing focus on sustainable practices, with many projects adopting greener consensus mechanisms and offsetting carbon emissions. The industry is exploring renewable energy sources and innovative solutions to reduce its ecological footprint. Balancing growth with sustainability is a key challenge for the future of digital assets. Centralization is a core principle of the crypto market. It means that no single entity controls the network, making it more resilient and transparent. Decentralized systems rely on distributed nodes to validate transactions and maintain the ledger. In 2024, decentralization is driving innovation in governance, finance, and data management. Understanding how decentralization works helps explain the unique value proposition of cryptocurrency. Interoperability refers to the ability of different blockchain networks to communicate and share data. In 2024, projects focused on interoperability are gaining traction, enabling seamless transfers of assets and information across platforms. This development is crucial for building a more connected and efficient crypto ecosystem. Solutions like cross-chain bridges and protocols are making it easier for users and developers to interact with multiple blockchains. Privacy coins are cryptocurrencies designed to enhance user anonymity and transaction privacy. In 2024, privacy coins remain a controversial yet important part of the market. They offer features like confidential transactions and untraceable payments, appealing to users who value privacy. However, they also face regulatory challenges due to concerns about illicit activity. The debate over privacy and transparency continues to shape the future of these digital assets. Layer 2 solutions are technologies built on top of existing blockchains to improve scalability and reduce transaction costs. In 2024, these solutions are essential for supporting the growing demand for decentralized applications and services. Examples include payment channels and rollups, which enable faster and cheaper transactions. Layer 2 innovations are helping to overcome some of the limitations of current blockchain networks. Tokenization involves representing real-world assets, such as real estate or stocks, as digital tokens on a blockchain. In 2024, tokenization is gaining momentum, making it easier to trade and manage assets. This process increases liquidity, transparency, and accessibility, opening up new investment opportunities. Tokenized assets are transforming traditional finance by enabling fractional ownership and 24/7 trading. Crypto derivatives are financial instruments whose value is derived from underlying digital assets. In 2024, the market for crypto futures, options, and swaps is expanding rapidly. These products allow investors to hedge risks, speculate on price movements, and manage portfolios more effectively. However, derivatives also introduce complexity and leverage, which can amplify both gains and losses. Understanding how derivatives work is important for advanced traders. Yield farming and liquidity mining are strategies for earning rewards by providing liquidity to DeFi platforms. In 2024, these practices remain popular, offering attractive returns for participants. Users deposit assets into liquidity pools and receive tokens or interest in return. While yield farming can be profitable, it also carries risks such as impermanent loss and smart contract vulnerabilities. Careful research and risk management are essential for success. Governance tokens give holders the right to participate in decision-making processes for decentralized projects. In 2024, governance is becoming more decentralized, with token holders voting on proposals, upgrades, and policies. This model empowers communities and aligns incentives, but also requires active participation and informed decision-making. Governance tokens are a key feature of many DeFi and blockchain projects. Oracles are services that provide external data to blockchain applications, enabling smart contracts to interact with real-world information. In 2024, reliable oracles are essential for DeFi, insurance, and gaming platforms. They ensure that smart contracts execute correctly based on accurate data. The development of secure and decentralized oracle networks is a major focus for the industry, helping to expand the use cases for blockchain technology. Crypto payments are becoming more common, with merchants and service providers accepting digital assets for goods and services. In 2024, payment solutions are integrating with traditional systems, making it easier for users to spend cryptocurrencies. The speed, security, and low fees of crypto payments are appealing to both businesses and consumers. However, challenges such as volatility and regulatory compliance remain. Cryptocurrencies are transforming the way people send money across borders. In 2024, crypto remittances offer faster, cheaper, and more accessible alternatives to traditional methods. This is especially valuable for people in countries with limited banking infrastructure. Blockchain technology enables near-instant transfers and reduces fees, making it easier for families and businesses to move money internationally. Lending and borrowing platforms are a major part of the DeFi ecosystem. In 2024, users can lend their digital assets to earn interest or borrow against their holdings without traditional credit checks. These platforms use smart contracts to automate transactions and manage risk. Crypto lending offers new opportunities for passive income, but also requires careful evaluation of platform security and terms. Taxation and compliance are increasingly important topics for crypto investors. In 2024, tax authorities are implementing clearer rules for reporting and paying taxes on digital asset transactions. Compliance with anti-money laundering (AML) and Know Your Customer (KYC) regulations is also a priority for exchanges and service providers. Staying informed about tax obligations and regulatory requirements is essential for avoiding legal issues. Scams and fraud remain significant risks in the crypto market. In 2024, common schemes include phishing attacks, Ponzi schemes, and fake investment opportunities. The industry is working to improve education and security, but users must remain cautious. Verifying sources, using secure platforms, and staying updated on the latest threats are important steps for protecting yourself from scam. Market sentiment refers to the overall attitude of investors toward the crypto market. In 2024, sentiment analysis tools use data from social media, news, and trading activity to gauge optimism or pessimism. Understanding sentiment helps investors anticipate price movements and make informed decisions. However, sentiment can change quickly, so it's important to combine this analysis with other research methods. Technical analysis involves studying price charts and trading patterns to predict future movements. In 2024, traders use a variety of indicators, such as moving averages and relative strength index (RSI), to identify trends and entry points. While technical analysis is a valuable tool, it should be used alongside fundamental analysis and risk management strategies. Mastering the basics can help traders navigate the volatile crypto market. Fundamental analysis focuses on evaluating the underlying value of a cryptocurrency by examining factors like technology, team adoption, and market potential. In 2024, investors use fundamental analysis to identify promising projects and assess long-term prospects. This approach complements technical analysis and helps build a well-rounded investment strategy. Understanding the fundamentals is key to making informed decisions in the fast-paced crypto market. Diversifying your crypto portfolio can help manage risk and improve returns. In 2024, investors are spreading their holdings across different assets, sectors, and strategies. Diversification reduces the impact of individual asset volatility and exposes investors to a wider range of opportunities. Building a balanced portfolio requires research, planning, and ongoing monitoring to adapt to changing market conditions. Investors in the crypto market often choose between long-term holding and short-term trading strategies. In 2024, both approaches have their advantages and challenges. Long-term investors focus on fundamental value and potential growth, while short-term traders seek to capitalize on price fluctuations. Understanding your goals, risk tolerance, and market conditions is essential for choosing the right strategy. Crypto market is constantly evolving, with new trends emerging each year. In 2024, areas like decentralized identity, real-world asset tokenization, and AI integration are gaining attention. These innovations are expanding the possibilities for blockchain technology and digital assets. Staying informed about emerging trends can help investors and developers stay ahead in this fast-moving industry. Despite its growth, the crypto market faces several challenges and risks. Regulatory uncertainty, security threats, and market volatility remain top concerns in 2024. The industry must continue to innovate and adapt to overcome these obstacles. By understanding the risks and staying proactive, participants can better navigate the complexities of the crypto landscape. Crypto market offers numerous opportunities for growth and innovation. In 2024, areas like decentralized finance, NFTs, and global payments are expanding rapidly. Entrepreneurs, developers, and investors are finding new ways to create value and solve real-world problems using blockchain technology. The potential for positive impact is significant, making this an exciting time to be involved in the crypto space. As we wrap up our analysis, it's clear that the crypto market in 2024 is more dynamic and diverse than ever before. With ongoing innovation, increasing adoption, and a maturing regulatory environment, the future looks promising. However, challenges remain, and staying informed is key to success. Whether you're an investor, developer, or enthusiast, understanding the trends and forces shaping the market will help you make better decisions and seize new opportunities in the world of digital assets.